Yo, what's up, amigos? Gonna do a quick little trade recap. I've been meaning to make a video on Tesla, uh, just to how to play it potentially, because I know a lot of retail traders have taken a hit, including myself, but there's some advantages I found. So today I'm gonna talk about MYO. I was long it, and then I also short swung it, and I was long at 8, went to, I think sold at like 32, 32, 34, and then trail stopped, and then I went short. We'll talk about MYO. I'm going to talk about Tesla, and then I'm going to talk about CODX. Um, I'm not a super fan of these daily recaps, but if you guys enjoy it, let me know in the comments below. Um, if it's beneficial for you guys, I'll do it. But I personally feel a bit iffy about it. But yeah, click subscribe, like, if it's beneficial, share with somebody. So let's get right into it. So the first one, I guess, I would say Tesla. Tesla, I got lucky. I think I shorted some at 950s or something like that. Very small size. This day I chickened out because in the past I've taken a lot of hit on it. So in here I was waiting for a push to 880s, 850, yeah, 880s or something like that. But it just washed right off the gate. I couldn't short anything. Um, so Tesla has taken, it's probably taken a lot of retail's money, and it's in my opinion it's one of the very tough stocks to trade. And the reason for that, in my opinion, is that it doesn't really give a shit much about technicals. So as you could see, like it goes above VWAP, and you're like, oh, okay, now you could buy, like it was below VWAP, it's a trap. Okay, it's gonna go above. You long at VWAP, you risk a little below here, and then it washes, and then you're like, oh, once down. I was like, oh, okay, shit. Now you're short. Now it goes up, and the next day it like gaps up and washes. It doesn't follow much technicals, and things like this, things that are high beta, Roku, TVIX, you'll find that you always lose a lot of money, and a lot of that is because a lot of traders are technical traders, and they put Tesla on a blacklist. And things with high beta, they know the market makers have been here a lot longer than we have as retail traders, so they know what you're looking at, they know what you're thinking, and it's not some taboo stuff, but it's just to keep that in mind, that they know what a retail trader is looking at, and they know the amount of retails involved in here. It's crazy. So how do you combat that? One thing, well, to be honest with you, if you are relatively new, being very blunt, like stay away from it. Sometimes not placing a trade, learn learning to avoid losers is a way to make money. It's a really, really big way to make money. But the other aspect, so this TVIX, Roku, if you've been trading for a short period of time, I would avoid it. But if you're going to be stubborn like me, which I shouldn't be, like I only come to big caps when I have an edge. Like BYND, I was short from like 214, 215. I didn't do a good job, but I was short because I had a fundamental thesis behind it. It was overextended. There was a lockup, blah, blah, blah. And people needed to put a short against the lockup happening just to get rid of their share, lock in the profits, etc. Tesla, not so much. This is a parabolic short squeeze, shorts covered. I'm pretty sure a lot of shorts covered the big money, and now it's just the aftermath. Um, so how do you combat it? Honestly, one thing that I found that has helped me is looking at the 1 hour chart, 1 hour chart, and where the volume is. No matter how much manipulators mess around, with the high beta name and things like that, they respect the volume. So I have another chart that shows the volume, but you can see the volume flow where it is. And the other thing is just stick on the 1 hour chart and then you'll see, oh, it got here, it rejected. Okay, well, this is not a good sign. You could technically take a short against it. Or if it comes here, bounces, or it gets to this level here, it like washes south and it reclaims, and then you're like, well, okay, it reclaimed this level 703. Technically, you could take a long here, either risking this or this is pre-market, I bet. So it's just like risking 704 or 700, the low here. And as soon as it reclaims 703, 705, you could technically take a long position. And then this candle here is thick, so it gets here. So this is a tip that would help you. I have a lot of weird positions on here. I've shorted a lot of calls. I've shorted a lot of um, I have puts. I had equity, um, and I also just did a vertical spread today when it was at VWAP here, 784 or something. Um, so this is my hedge, I guess, which is weird. I'm not amazing at this stuff, but I was also short the equities as well. So I made a mistake. I love the ATRs. I use a trailing stop ATR, and I got stopped out. It was a $4 ATR. So these are, I made my notes on here. Daily recap. Yeah, so a mistake. I'm going to do this recap for myself as well. So here in the morning, I used the $5 ATR when the 5-minute ATR was $8. I should have used like $10 or something like that, and I don't think it would have stopped me out until it probably got to like 790. Yeah, 790. It would have. So that's a mistake that I made. But this I was short. I think I was short from like 790 or something. I was short. I think I was short from here. I was short from here some equities, and then I added here. So I think my average. It was just about my average that I cut it maybe a little bit, and then I also partialed before. I partialed half yesterday here. So yeah, this was not bad. And I've been shorting the 960 calls. So I just let that go, but I wanted to hedge against it in case it goes. It didn't work out, and then I added a trail stop. My trail stop from here to here, I think was about $8, because that's what the ATR got smaller. And I was thinking, okay, I'm gonna risk below this thing here as well. I'm gonna risk below 780. It was perfect, so stopped me out. Unfortunate, whatever. And then Tesla, typically, I was looking at the hour. Like, you know how I say, look at the hour. So it washes down, and I see there's a bunch of volume around here. I think the volume was around 742, 745, 745, 750, or something like that. There's a big volume level. So that's what I longed here. This is like a 15-minute chart. I sold into the key level. This is a bit of luck. This is not a. I'm not that very good. So I sold. I got short. I got short on accident, but I'll take it. Whatever. It was a key level. Short is small, and then I just added trail stop ATR, which is, again, I love it. With Tesla, when you're in the money, I just add an ATR trail stop, and it can do its thing. I don't care, because if you pick the right direction, it just goes. Holy smokes, 9 minutes on this. So that's what Tesla. Recap: if you're new, avoid it. It's so much better to avoid losers. You can make a lot of money avoiding losers is a really, really good thing, and it's really beneficial. Okay, so MYO, I was long, I think, from $8, and I sold 2/3 at 32.34, and then I added a trail stop for 1/3. and my trail stop, I had set it up with the 5-minute ATR. I learned this from Shatkin. Go give him a follow. Very smart guy. So took 2/3 off, and then uh, trail stopped sub $25, and it got stopped out. And then I switched short on my different account. So I'm short swinging it now still. I'm still holding a position. So that's MYO. And I think they just came up. I think they're going to price it tomorrow. The S1 MEF came out. So I think it should be good to go tomorrow. Hopefully we'll see a big gap down. So that's MYO. And then CODX. I think there was a lot of people that were short swinging CODX, playing the offering. With this name, it was a tricky name. I've been swinging it short, just like everybody else, and I know it's horrible. But the good thing is, I understood that there's a lot of people that are short, and I knew multiple times that it would squeeze. So what I do is on a different account, I hedge my position. Whenever I can, I just hedge it. I get the sense when it's gonna, like, it goes parabolic up. I learned this from trades, where basically you have a small size in your swing, and at the other you hit it on an intraday as well. What that does is you will avoid taking a big overnight loss. Sometimes we make the error that we can't stop out, but sometimes it's the market. There's a lot of flaws that we can stop out, but you want to mitigate whenever you want to have control as much as possible. Long story short, I was swinging short, goes parabolic, I hedge my position, and I'm thinking, okay, I know so many chat rooms, so many people are waiting for the offering, and it's like, oh, it's gonna happen. Anyway, so I hedge almost everything, and then I sell into the fours, and then I also have a daily, on the daily account, I was shorting it as well. So when it gets to around 4 levels, let's see what I did here. This here I shorted at 387, and then I covered, well, it says it up here, 391 I think, and then I covered 372s, and then as it got to 4, I slowly started adding up. I wanted to give it a bit of wiggle room. 420s I had as a stop. It pushed above that. I was like, okay, that's it, I'm gonna cover. Typically, anytime I'm like, oh, that's it, I'm gonna cover, it tends to be the top, but no regrets. So I reshorted it. There, and then I covered into the washes, and then I reshorted it, covered into the washes. I still have my swing, but the swing is such a small size that if it does overnight gap into $4, $5, $6, not just this name, but any other name, I'm not gonna get hurt. And you're welcome to incorporate that in your trading. It's beneficial, but I work with the core, so I short a small size overnight, and then the next day I basically just short intraday, heavier size, and it gives me a good pulse of the name, etc. So that's what it was. Summing up, Tesla, if you're new to trading, stay away from it. There's honestly, like, there's not much real edge to it. Like, yeah, it's super parabolic, technicals are there, but these names are very hard, very tough, especially if there's not much clear edge on it, in my opinion. And these guys definitely screw with you from the technicals aspect. And the key thing that you want to take away is stick to the bigger time frame on the names that have high beta, because as you can see, it washes south, like it breaks the technical, and then it just goes, it makes a lower low, and then it reclaims and gaps up. It does the same thing here, lower low, reclaims, and then gaps up. But you can't can't do that. You can't be like, oh, next time it makes a lower low, I'm gonna buy it. Like this here makes a lower low. If you, I guess technically, if you bought it, it would work, but then you would get lost. So the stick on bigger time frames. I'm just summarizing everything. MYO. I don't know. I guess I could. One day I could go over why. I think I did go over in the last video why I was long MYO. I was long at 8 and sold 32s and then now short. It's basically because of the play offering. I knew it was a high probability that it would get pumped. So we got MYO, Tesla, CODX, CODX. Be cautious. One of the most dangerous plays that you could have is knowing that an offering, quote unquote, offering is coming, and it can just rip faces a lot. So if this was beneficial, if this was useful, let me know. Share it with somebody it may benefit, and I'll know if to keep making these or not. Take care. Subscribe, click like, and if you made it this far, hopefully it was helpful. And if it was beneficial, why not subscribe? So have a good day, amigos. Take care. Good luck trading.